the investment community's interest in metals is rising again, so is volatility. Copper is in the back seat, but nickel has been at the forefront of headlines. We have with us today Simon Collins, Head of Metals and Minerals at Trafigura. He's joined us to discuss metal supply and demand fundamentals. Simon, good afternoon.
Good afternoon. It's a pleasure to be here.
Thank you. Simon, with the Indonesian ban, nickel prices have rocketed earlier this year. But there are other parameters to take into account than this particular ban. What do you believe are the prospects for nickel?
Look, the catalyst to the increase in the nickel prices was brought about by the mineral ore ban, which came into place in January this year. But people are also looking at other areas to take some indication for where the prices may go, and particularly for Russia under the current circumstances and the potential prospects for sanctions in the future. So,
are you saying that there could be a shortage and that the prices are going to go higher?
I think even under the current scenario, we would be anticipating that there will be a shortage of nickel in 2015 and 2016. But of course, if there are other supply issues, then that could be exacerbated and we could see high prices as we've seen in the future. Nickel has been a very volatile market in the past, and I mean currently it's around about $18,000 to $19,000 a ton. You go back 3-4 years ago, it was up at $50,000 a ton. So, you know, there are quite a few people who are anticipating it could go up another 20–25% in 2015 and potentially higher.
Now, it's not the only metal to watch. There's been a lot of talks around zinc, platinum and palladium. What are your views on those metals?
Well, for zinc, people are really looking at the supply fundamentals. We're already seeing that zinc metal stocks are starting to reduce as zinc prices have come down to the cost curve or even below the cost curve. But it's the mine supply which is the question mark going forwards. There's not been a big investment in mine supply, and we know that some major mines such as the Century mine in Australia will be closing mid next year. So people are looking at that and questioning where the additional supply is going to come from. At the same time, we're seeing that the demand for zinc metal is relatively strong on a global basis.
And platinum and palladium?
Again, platinum and palladium could be influenced by the situation in Russia. It's a major producer of palladium and also of platinum. We've also seen supply disruptions in the platinum area, of course, because of the problems and industrial action in South Africa. So if you put these things together, that's quite one part of the reason why prices have been increasing of late, and also combined with the very low interest rate environment that we're seeing today, and the investment community again focusing a little bit more on precious metals.
Now, copper remains the barometer for growth in general. Any signs of a drop in Chinese demand?
So far it seems not. Most analysts have been forecasting an oversupply for this year, primarily in the second half. And so far this year we've actually seen exchange stocks have been declining both in Shanghai and on the London Metal Exchange. So people are going to be watching very carefully what's happening over the next few months to see whether stocks will actually increase or not. Certainly, as copper, as you mentioned, can be a barometer for global growth, and it would imply that underlying demand is very strong.
Well, Simon, thank you very much for joining us today.
Thank you.